and what was the fair market value for that unit when you bought it, and what's the fair market value for that unit when you sold it. As long as you have that information, you can use a specific identification method, which can save you, could be a great tool for tax planning. Specific identification, that's another major update in this whole arena of cryptocurrencies, is that in the past, so if you think of cryptocurrency, it's kind of very generic, right? One Bitcoin is not really different from another Bitcoin, but you might have purchased it at a very different time, and it might have a very different basis to you. So in the past, we had to use first in, first out method. And so in the past, it was this, FIFO. That was the method in the past. Now we have specific identification. You need to satisfy a few conditions to be able to use this. So what are the conditions? You need to have, for this method, this is still the default. This is the default method to use. So whatever you purchased your first currency for, let me give you an example. Let's say, very crude example. Let's say you've held your first Bitcoin that you purchased, I don't know, 5 years ago, 2016, whatever value was traded at that time, and you've been buying them since then. Well, when I just sold my Bitcoin, boy, did that appreciate in value, huh? I would have to report first in, first out. So that means if I just sold one Bitcoin, we're going to look at how much did I pay for it 5 years ago. Maybe I paid for it $10. How much did I sold it for? I don't know the current exchanges, but let's say 2,000 easily, right? Just for the demonstration's sake. Well, I just had 1990 of gains. Huh? That's a lot of gains to report on this one unit of currency. Now, if I had specific identification method to use, I would be able to say, well, yeah, I just sold this one, but that's the currency I bought last week. It really didn't change much in value. I'm still sitting on this $10 that I bought back in the day that's made me rich, but whatever I just sold now, I sold the one that I just bought most recently, or some other one when it really went up in value. So I'm minimizing how much gains I'm reporting right now. So for that, you have to meet a few conditions. Here they are. So you need to know date and time of each unit that I hold. Each unit that I hold. That's one, because I need to be able to identify it. Number two, I need to know my basis or the cost. How much did I buy this for? Did I exchange goods and services? How much goods and services did I exchange to get that unit? For each unit. And also fair market value at the time that I received it. The next item, I need to know date and time of each unit sold. And you want to guess the last one? I need to know FMV, fair market value, of each unit sold or exchanged. And in addition to FMV, my proceeds. How much did I actually get? So very similar to stock reporting. So once you have this information, if you're keeping good track of the date and time when you purchase the unit, when you sell the unit, how much you purchased it for, how much you sold it for, and what was the fair market value for that unit when you bought it, and what's the fair market value for that unit when you sold it. As long as you have that information, you can use a specific identification method, which can save you, could be a great tool for tax planning because it can save you some money in taxes in the current year. It allows you to better plan for gains and losses, reporting gains and losses on these transactions. And finally, the last item I wanted to go over today is a tax planning tip. So we're talking about appreciation earlier, and what happens if, what happens if your cryptocurrency has greatly appreciated in value if you sell it, you're subject to capital gains taxation, whether it's short-term or long-term taxation, right? Long-term capital gain rates. Short-term taxed at ordinary rates, long-term taxed at capital gains rates, which may or may not go up significantly in the coming years, depending on this new legislation coming out from our government. We'll see about that. But let's say your crypto holdings have greatly appreciated. One thing you can do is consider charitable donations of crypto. Now, obviously, you can only benefit from this if you're itemizing your deductions. So if you're filing a Schedule A and you have other deductions that go on there, one other thing you can do is consider charitable donations of your appreciated cryptocurrency. Why is that a good idea? So the reason that that's a great idea is because you get to deduct, if you held the currency for the long term, over 1 year of holdings, if you have this, then you get to deduct the fair market value of your crypto, not your cost. So you get to deduct your fair market value, but you never reported this appreciation as taxable income. So you bought something for $1, it went up in price, it's being now traded at $2,000. Now, one thing you can do is you can sell it for $2,000, pay capital gains tax rates on this gain, and let's say you're left with, I don't know, I'll be generous, let's say you're left with $1,800 or $1,700, and you can donate the $1,700 to your charity of choice. Hold on to it, and that, if you would donate it, that would be your deduction after tax. Or you can donate the entire $2,000 to charity, and this is going to be your deduction, $2,000. So you're deducting the full amount, you're not paying tax on the appreciation. Of course, again, this is if you're itemizing your deductions. Now, this only applies for cryptocurrency that's held longer than 1 year. If you have short-term appreciated cryptocurrency that you held less than 1 year, then the rules are different, and basically then you get to deduct lesser of FMV or your basis or your cost. So in this case, let's say you bought a Bitcoin or some other cryptocurrency for $1, and this year had been amazing and it went up to $1,000 or $2,000, right? It went up to $2,000. Well, if you're donating it now to charity, but you held it for less than 1 year, you look at the smaller of your basis or the fair market value, and you get to deduct your basis. So in most cases, it pays to wait until you've held it for longer than a year, make it a long-term capital gain type transaction, and donate it in order to receive the full amount as an itemized deduction, which also may be subject to its own limitations. That's a separate calculation. But this is kind of some of the basics and some of the new developments that I wanted to go over with you for the cryptocurrency. I hope you found this useful. If you liked it, please give us a thumbs up, subscribe to us. We'd love to hear from you, so leave us a comment, tell us what you thought, or if you'd like any other topics for us to go over, let us know. And remember, here at Freyman CPA, your success is our success, all day, every day. Thank you. Take care.